Good morning, dear friends. My name is Clive Thompson. I'm here to give you the financial and investment news for Friday morning, 14th August 2025. The big news last night was the producer price index, which came in at a much higher level than expected. It didn't affect stock markets much, but it certainly changed all the expectations about interest rate cuts. So the producer price index for the month of July increased by 0.9% compared with what was expected, which was just 0.3%. So this was shocking news on the price front because it shows that the because the producer prices are rising, which obviously is a forerunner to what's going to happen to consumer prices further down the line, because producer prices raise, then the consumer prices get raised later. So what it showed, if we break it down a little bit further, is that final demand services increased 1.1%, and final demand for goods, these are producer goods, increased by 0.7%. So both particularly high numbers, higher than expected, and that tells us that inflation is coming down the line. And the impact of this is what the Federal Reserve are going to do on interest rates, because it looks like inflation is going to start rising. So whereas a few days ago we'd seen that the possibility of a Fed rate cut had risen to 100%. So if we go back actually a month ago, before the producer price index, we had the probability of a cut at 55%. A week ago it was at 88%, or going on 90. Yesterday, the probability of the cut was showing it, before the producer price index, was showing it 100%. Not only 100%, but there was 94.3% probability of a quarter point cut, and nearly 5.7%, nearly 6% probability of a half point cut. But today, the probability of a half point cut has gone to zero. The probability of a quarter point cut has gone to 93.1%. That's a few minutes ago. And the probability of no cut at all, i.e. leaving interest rates where they are, has risen from 0% to 8.9%. So you would have thought that we would have had a large negative reaction on Wall Street to that news, especially in sectors like the technology sector, which are very interest rate sensitive. Obviously, technology stocks, they benefit from lower interest rates because the opportunity cost of holding something which does not pay dividends, and most tech stocks don't pay dividends, or they pay very low dividends, the opportunity cost of holding something without dividends goes down when interest rates are reduced. But the expectations were not that interest rates will reduce, but or they were lower, that they'll reduce, and certainly not reduce as much as the market hoped. So tech stocks should have gone down, but they barely changed. There was some sector rotation. Defensive sectors like utilities and consumer staples slightly outperformed. Growth-oriented technology stocks slightly underperformed, but there wasn't a great deal of change there. The Dow Jones Industrial Average, for example, had a modest decline of 0.02%, almost nothing. The S&P 500 had a very, very modest decline. I'm just checking it over here. It was, I think it was 0.03%. In other words, no, it was a slight increase, 0.03%. Another all-time record for the S&P 500, the 18th record this year, but the size of the change was hardly anything to write about. Nasdaq, the composite index, showed a slight decline, almost nothing at all, 0.04% down to 21,704. So this kind of shows us that investors don't really care as much as they should be caring about interest rate expectations. They think that the strength of the technology companies will continue to see them good, and they're not selling in the light of this fairly negative news last night. Overseas, this morning we saw the Nikkei index rise 1.6%, basically on good news about the gross domestic product, or GDP. In Japan, the GDP rose by 1% versus 0.7%, which had been expected. So stronger growth than expected. The Nikkei index rose by 1.6% to another all-time record high of 42801. Actually, that's the latest number, which is only up 1.28%. It was up 1.6% earlier in the day. The currency helped the Japanese equity market a little bit. The Japanese currency fell by 0.5% to 147.09 yen against the dollar following the GDP release. So that wasn't a big decline, 0.5% down. But a decline in the currency does help equities because it makes overseas profits which are remitted back to Japan seem larger, so helping the equity market in that respect. And it also makes Japanese goods being exported from Japan to foreign markets ever so slightly cheaper when you have a weak currency. So the minor effects there, but certainly helping. But export-oriented companies in Tokyo benefit. So companies like Tokyo, Sony, and Nintendo had strong positive performances this morning in Tokyo on the Tokyo Stock Exchange. Hong Kong, on the other hand, this morning had an opposite experience to that of Japan. I remember Japan went up more than 1%. Well, the Hong Kong index dropped by 1.2%, and that was broadly speaking because of disappointing Chinese indicators. Firstly, industrial production was announced to have increased by 4.8%, well below the expectations of 5.2%. The other indicator which came out yesterday in China, which was negative for the Hong Kong market, was retail sales in China, which showed a growth of 2.7%, much worse than the 3.5% expected. So we're seeing this industrial production down at 4.8% versus the 5.2% expected. It's a slowdown from the previous month's performance as well, and it does suggest that China's manufacturing sector has got headwinds, perhaps from the domestic market, but maybe also coming from the tariff effect on the international markets. And of course, the other worrying figure out of China was the retail sales, which shouldn't be affected by international tariffs or international developments. That being down to 2.7% compared with the 3.5% expected was pretty bad news. It means Chinese people are spending less in the shops than expected. It means the economy is not recovering as fast as the Chinese policymakers would like or were hoping for or expecting. But it does beg the question as to whether the authorities are now going to step in and provide some extra stimulus. So they'll be certainly considering that. In bonds, there wasn't much change. I saw a report saying that the bond yields in the USA had declined very slightly. It looks like it's exactly the same yield as yesterday. Yesterday I reported the US 10-year at 4.27% yield, and that's what I saw on my screen this morning. So I don't think there's really been any big change in the bond yields. Another bit of big news which might affect markets, maybe not tonight, but maybe on Monday morning, will be the outcome of the meeting which is happening today between President Trump of the United States of America and President Putin of Russia. They are meeting today in Alaska. And it's the first direct meeting between the two leaders, and it'll be focusing probably on ending the Ukraine conflict, or at least having a ceasefire. They'll be discussing nuclear arms control. So I guess people are hoping for world peace to be declared. If you think there's a chance of that, let me know. But if I'm honest about it, I don't really expect any good news. We'll see which way that works out. Bitcoin, for a while, they continued to surge, reaching an all-time high of $124,480. But then it disappointed all those who are following Bitcoin because it suddenly turned on its heels and went back down very, very rapidly. It's now trading at $119,214. Still up quite a bit this year. I think it's up about 25% this year. Not bad, but obviously it did disappoint a lot of people that it couldn't push through what they saw as a landmark level of $125,000. And the turn in the Bitcoin price happened exactly at the same time as the PPI, Producer Price Index price, was released, showing that potentially higher inflation is on the way and showing that potentially interest rates won't be cut as much as some people were hoping. So what does this show? It shows that Bitcoin is becoming, which is supposed to be independent of everything, it's becoming a little bit more aligned to the economic news. Funnily enough, Ethereum rose, at one point it hit 4,700. It's now 4,656, which my screen shows me is up 2.3%. Normally Ethereum and Bitcoin dance together. So it's a bit odd that Bitcoin is down a bit and Ethereum is up a bit. The reason given, according to the financial news, is, and I'll read it to you, the second largest cryptocurrency by market capitalization benefited from continued development activity in decentralized finance applications and non-fungible token markets. Interesting. I think it's probably something else. There is a company out there which is trying to be another MicroStrategy following Michael Saylor, but in the Ethereum market. I'll let you go and look it up because I don't really want to say the name because I'll be seen as promoting it, and I certainly won't be buying it. But it's like a little tiny company which has gone from absolutely nothing to saying it's going to buy $1 billion of Ethereum. Obviously a significant amount of Ethereum, and they're raising cash like there's no tomorrow. And of course, once they got their billion, they'll probably say they're going to buy another billion, and so on and so forth. So it could be that that one is supporting the market. Now, as for this meeting which is coming today between Trump and Putin, it's due to start. No, it's not due to start. President Trump will be leaving Washington at 11:45 p.m. UK time. So that's kind of late London time, and he will meet Vladimir Putin in, I suppose it's Alaska time or Anchorage time, doesn't say exactly, at 8 p.m. And then he'll leave Alaska at just after midnight on Saturday morning. So European markets will be already closed by the time he meets Vladimir Putin, and US markets will only have an hour left. I don't think we'll hear any news whatsoever during the first hour of their meeting. So probably whatever news comes out will come out after markets have closed, and therefore you'll have to wait till Monday morning for whatever the market reaction is. So if you want to bet on anything, see if you can find a way to bet on Secret Service movements. I'm sure there's going to be a lot of secret services from both sides rushing to Alaska to try and find out what's going on or what's supposed to be happening. I don't know how you do that, but there shouldn't be any great index reaction from the meeting. Just to finish off on the indices, the FTSE index is pushing forwards. It's nearly at 9,200. The Paris index, the CAC 40, the CAC 40, is getting stronger slightly yesterday. In Frankfurt, the DAX index, the DAX index, is within 1% of its record in July. So all these indices are pushing forwards ever so slightly. Nothing big to talk about. And that's the end of my morning report. So ladies and gentlemen, I just forgot one thing. The DXY, the dollar index, it's pretty much unchanged at 97.4, same as yesterday, more or less. So the dollar isn't moving very much despite the PPI numbers. So ladies and gentlemen, thank you very much. I hope you like this. Subscribe if you want more, and like, and you're welcome to comment, and I'll have a look at the comments later in the day. Thank you. Bye bye now.